Hello, thank you very much for staying with us. Nigeria's gross domestic product recorded a 3.98% growth year-on-year in real terms in the fourth quarter of 2021. Now, showing a sustained positive growth for the fifth quarter since the recession witnessed in 2020, when output contracted by minus 6.10% and minus 3.62% in Q2 and 3 of 2020. Now, the fourth quarter growth indicates a steady economic recovery, accounting for an annual growth of 3.4% in 2021. A breakdown of the sectoral performance of Q4 GDP shows that agriculture contributed the most to GDP with 26.84%, followed by trade with 15.6% and information and communications with 15.21%. Meanwhile, real growth of the oil sector was 8.06% year-on-year, indicating an increase of 11.71% relative to the rate recorded in corresponding quarter of 2020. While the non-oil sector grew by 4.73% in real terms during Q4 of 2021. Well, I told you, joining me live in the studio is an economist and tax manager, PricewaterhouseCoopers. He's also a friend of the house, Mr. Abiola Kaudi. Mr. Thank you so much for your time.
Thank you for
having me.
It's
good to have you live in the studio. And now we're preparing to look at the Q3 figures and sectoral whatever, but we now saw Q4 figures out today. But let me just ask, what do you think is responsible for the fundamentals of both figures? We seem to be growing gradually.
Okay, so thank you for inviting me once again. Yeah. So I'll start with what I'm sure most analysts have said. All right, you can first of all make reference to the base year effects. All right, so if you look at most economies grew. Right, advanced economies, developing, emerging economies, most of them grew, right, in 2021, and you can link it to the impact of the COVID-19, right? So what you are simply looking at when you're looking at the GDP growth is that you are looking at the performance in the current year relative to the previous year. And if you look at 2020, most economies were in a lockdown, right? So they couldn't really carry out activities as they would. But in 2021, they began to open up, so you would see lots of activities. That's part of the things, part of the reason why we have that growth there. Then also, if you now narrow it down to the Q4, all right, there are lots of festivities, right? A lot of people coming out, spending, cinemas coming out, opening for the festive period, right? So most of these things actually translated into the growth we've seen. And let's not forget, there was also a lot of spending by government, right? Just to revitalize the economy once again, right? Intervention plans and programs. So these are the outcome, the effects that you are seeing in those results there.
I want us to look at the performance of oil, and of course, because I always say we need oil to diversify our economy. Let's be realistic. We need that money. So let's look at the performance of oil and maybe the non-oil space for both of the quarters, and even agriculture. What is playing out? What is your reaction to the figures from these sectors?
Okay, so for the oil sector the oil sector actually contracted, right? But what happened is that relative to previous quarters, it was better. Right, okay. But it was a negative growth all the same, minus 8.03%, right, compared to, I think Q3 was about minus 10%, and I think Q2 was about minus 12%. So it did improve a little, though on the negative side, right? And if you consider what we've been going through in terms of production, right, there's been lots of diversification of oil assets by IOC, international oil companies, trying to follow what the COP26 has actually requested that they do, diversify from fossil fuels, right? So they are trying to diversify their assets. So production is kind of hampered a bit, right? Then you also want to look at issues that has to do with infrastructure, maintenance of the infrastructure, and also things that have to do with pipeline vandalism, right? So all these things, by the time you bring them together, they kind of impacted the oil and gas sector negatively. Nigeria had not been meeting its quota for a very long time, So there's been a lot of issues in the oil sector, right? Sadly, its contribution to GDP it's little, but it's still our high source of foreign forex earnings, right? Then if you look at the agricultural sector, The agricultural sector has actually been impressive. It has been steady. It has been steady. I think 2%, 2% in 2020, 2% in 2021 as well. So if you think about it, we all need to eat, right? We all need to eat. Farmers, and the farmers, I give it to them. I think it was quite bold, despite the insecurity that was witnessed in the Middle Belt. Most of these food-producing nations, you still see most of them still going to farm and still farming. And we can also look at the harvest season. We can look at some of the interventions of the central bank as well has actually even helped to boost production in that sector. So that's the reason why you see the 2% steady growth for agriculture. Then in terms of manufacturing on the other hand, right, in 2020 manufacturing actually contracted. Negative, it had a negative growth, right? But in 2021, it now picked up 3%. And you can tie all these things to most of the interventions by the central bank. You can count, I think the central bank has released something almost like 3 trillion naira in terms of intervention. You have things like, there's the Anchor Borrower scheme for the agriculture. If you look at the agricultural, the manufacturing sector, there is a 1 trillion intervention fund that was kind of doled out. If you look at textiles, in terms of textiles, they doled out about 50 billion, if I'm not mistaken. A lot of money has been sent. Even there's the agri SME investment. Lots of schemes have been given. Pharmaceuticals also, right? Because there's also a component of manufacturing. Considering that we are coming from a COVID-19 pandemic, right? So they tried as much as they could to kind of spur growth, investment, and expansion of the pharmaceutical industry. So lots of monies were doled out. So you could allude that growth, that improvement to most of these interventions that we are seeing, right? So I think these are the reasons for those growth figures we have there.
Foreign trade total merchandise stood at about 11.7 billion. I think that should be in dollars, right? 74.71% higher when compared to the value of Q4. Well, I'm not really staying with those figures, but I just want to know, what are we doing? What are we doing right? What should we do more to improve our foreign trade? What policies do we need to institute that you think can help us do better than what we have on ground?
Okay, the stats there actually has to do with the value of trade, right? It's looking at both imports and exports, right? But I think something that is even key is we need to even look at the net impact of that trade, right? So if you look at the figures, Nigeria's export was about 5.7 trillion, right, in that Q4, based on statistics that was released by the MBS. Now, the import was 5.9 trillion. That gives an import deficit of about 173 billion. That's quite a lot. And if you analyze it, if you break down our imports, it's ironic. I was going through those figures, right? And you can imagine our top 5 imports. Number 1 of our imports was PMS. Yes. Right, PMS, 24%. That's number 1. Number 2 was wheat. Now, if you tilt it to the other side, our number 1 export was actually crude oil, 74%. Crude oil was actually our number 1 exports, right? Then, if you look at our top 5 exports, most of them had to do with oil and gas, right? Probably with the exception of a little bit of manufacturing, but most of them had to do with oil and gas. Agricultural products, cocoa beans is coming at number 6, and that's just like 1% of our exports, right? So if we want to improve, on the trade imbalance, I think one thing we need to do is that we need to begin to add value to what we actually export. There needs to be a lot of value addition, right? If we can refine our products, we thank God the Dangote refinery will be coming up very soon. If we can refine our products, that would be better. It could reduce our dependence on imports, right? And it will also help us to conserve forex. If we can add value to our cocoa beans, right? If we can add value to our sesame seeds, these agricultural products that we're talking about, if you remember, agriculture actually comprises about 26% of GDP. But in terms of export earnings, it's very, very low. If we can add value to these things, we will be able to earn a lot of FX, right? And you also look at opportunities that are around us. There is the Africa Continental Free Trade Area Agreement, AFCFTA, right? So there's a whole lot of opportunities, right? All we need to just do right now is add value to our products, right? Make sure that our products are up to standard, definitely, because I know there was this report that said at one point in time that some of the cassavas that were exported to the United States, they had to be returned. Yeah, there were issues with beans as well. So most of these things, we have to ensure they're of high quality, and we have to ensure they're competitive, right? But if you now want to drill down, how can you make your products competitive? You want to look at, and in terms of competitiveness, we're looking at what is the cost of producing those things comparative to other nations around you, other producing nations. So I think one thing that is important is infrastructure. One thing that is important is standards and quality. So as long as we have all this in place, I think we'll do way better than what you are seeing there in those figures.
Brilliant stuff there. Let's talk about foreign portfolio investments now and foreign direct investment. Many will say that at this time, as we move towards an election, we shouldn't even think about foreign direct investments. Investors are sitting on the fence and looking, Nigeria, what is happening over there? What's going to happen in 2023? So how do you see this shaping our economy regards to investors' confidence? When do you see it coming back to Nigeria?
I think that's a very good question. It's even good you mentioned it. Recently, I think about last week, JP Morgan actually removed Nigeria from the overweight category list, right? True. So
replace us with one country, Serbia, because
Serbia and Uzbekistan, right? So it's quite interesting to note that it's quite interesting to know that they even said that most emerging markets, they're actually at the mercy of the Fed, right? So the issue right here is that we have the Fed, that's more like the central bank for the United States, raising rates. We also have the Bank of England raising rates. So a lot of foreign portfolio investment are actually moving to where they can get higher returns and where the risk is actually low, right? Indeed. So and it has implications for us in Nigeria.
I would have done that too if I were. It's my money. I want to put my money where I'm sure I'm going to get returns.
Yeah. So it has its implications for Nigeria, but all the same, you also have to consider that what we had in terms of foreign portfolio investment pre-pandemic and what we have, I won't say post-pandemic because it's still here. Yeah. So it's quite low, right? It's quite low. So in terms of impact, it might not be severe. We've been seeing figures about foreign portfolio investments being somewhere within the range of about $1 billion, right? I don't see much of a severe impact on the Nigerian economy. But one thing that we expect over time is that we think that the central bank, the monetary policy, might actually want to consider raising rates somewhere along the year, right, to also attract investments. Because apart from that, you would also see a situation whereby governments will probably be borrowing domestically, right, because the cost of borrowing, issuing euro bonds is going to be quite expensive. The last one we did, we got it at, I think, about 8.75%. That was the one we borrowed in March, the $1.25 billion, right? So it's going to increase the cost of borrowing, but I think, like you rightly said, investors will be wary, right? They'll be monitoring the situation of things. We're in a pre-election year, right? So there is that concern that we might not get as much investment as we need, but I also don't think it's something to worry about.
Not something to worry about. Okay, let's wrap up almost finally. What kind of growth are we now looking at? There's been this steady growth, I think, for some quarters now consecutively, and it's fragile. Let's agree, it's fragile. When are we getting to that point? We like that's cliché, all-inclusive growth. That is what we all want to achieve. You hear that from the government, you hear that from the private sector, everybody's talking about all-inclusive growth. When are we getting to that point? Are we still in the transition period? I always like to ask this question because all of these policies, we need to start to see the impact.
Yeah, you're quite right. So, I mean, all these figures we're actually reading out, it's not impacting the man on the street.
Yeah.
We're just hearing it.
He just wants food on his table.
Yeah, so I think one thing that is very important is, so the growth we are currently seeing, like we said, it's more like we're coming from a pandemic here, it's more like a bonus, right? So I think by the time the GDP growth rate is going to be getting to something within the range of 6%, we expect that at that point in time, you are seeing a massive increase in activities, right? There's a lot of production, there's a lot of supply. Then the prices, which is inflation, prices will begin to drop. That is key. So for me, I think we need to do more than we're doing in terms of security, right? There's the part the federal government needs to play in terms of security. If you can address issues of security, you are also indirectly addressing issues of food security, right? And if you can address infrastructure, right, the cost of transporting these items is going to reduce the price drastically. And if we can also reduce the if you address the food security issue, it's also going to reduce it's going to reduce import dependence, right? So if we can get a lot of these things right, it's definitely going to reduce the price. And as long as the price of these items are being reduced and a lot of people are being employed, a lot of people are actually working, people will be able to afford most of the items. They will be able to spend, right? So I think it's a whole inclusive thing. There's something called a big push, right? So from my own point of view, there needs to be a massive spending, a lot of spending in all sectors of the economy at the same time, right? So this thing kind of spurs growth, and it also increases the purchasing power of people. As a result of the activities that are going on, there will be employment, there will be a lot of spending from consumers. So it's until we get to that particular stage. So what I would expect is that I would love to see the monetary side and the fiscal side working together in order to address this issue. So I think a lot of spending is required, and we need to deal with most of the structural issues that have to do with production, infrastructure, security, even the issues that have to do with the border, right? All these things need to be addressed for us to arrive at that growth that will become inclusive.
The border is open. Now, many will say that after the shutdown or the closing of the borders, no real impact. That's what some people tell you. Even some business people say they've lost their source of livelihood all because of that. So, in all of this, do you think the MPC could tinker with the figures in their next meeting?
Well, at the next meeting, I think we can't really tell. There might be a likelihood that they will, but I personally don't see it happening at the next meeting. Probably in the next two meetings. Before the end of the year, definitely, I would expect something like that.
I must thank you so much. I've been speaking to Mr. Abiodun Kayode Ali. He's an economist and a tax manager with PricewaterhouseCoopers. Thank you so much for spending your afternoon with us. We appreciate this.
Thank you, too.
All right, then.